I want to start off with markets because this week we saw Bitcoin dip below $60,000 for the first time since early May. And Bitcoin has been trading in the low 60s, quite the contrast from just a few months ago when Bitcoin was reaching fresh all-time highs above $73,000. So what exactly is happening with markets right now? Is part of it profit taking after that explosive rally we saw earlier this year, coupled with the fact that typically the summer is just slower when it comes to investing?
Exactly. I mean, it's a confluence of factors. We actually wrote an article about this in early May about things to look out for on the downside as it relates to Bitcoin. And part of it is just, after a very strong Q1, Q2 for all risk assets, of which NVIDIA is kind of the poster child, there's of course going to be profit taking. And you can see that with the on-chain metrics as well. If you kind of look at recency of coins bought, those that have had more profit embedded have been selling recently. There's also been within the Bitcoin ecosystem concerns about Mt. Gox liquidations. So if you remember all the way back to the Mt. Gox hack, the trustee is getting ready to release a substantial amount of Bitcoins to those affected. And there's been some concerns and I think some early speculation or profit taking ahead of concerns about mass liquidations of those Mt. Gox tokens. And then, as you mentioned, kind of the summertime lull, there's the famous, sell in May and go away, which again, is kind of affecting risk assets. So I think there's, macro considerations here are kind of the driving thesis coupled with at the micro level, concerns about Mt. Gox.
So what do you think it will take for Bitcoin to reach fresh highs once again? Those highs we saw back in March, do you think Bitcoin can in fact reach $73,000 again? And if so, what's your timeline?
Yeah, so I think it'll certainly hit that level again. The question is when.
Right.
And so there's a couple of considerations for the rest of this year. The big one, of course, is does the U.S. slip into recession? And again, back to that macro theme. And I think that's where you're starting to see also, if you just look at tech stocks, a little bit of profit taking there as well. If you look at Bitcoin, it's traded much more like a kind of high beta tech stock in the last several years than it has other asset classes. And so in many ways, I think Bitcoin is kind of the potential canary in the coal mine for risk off behavior ahead of potential concerns about a recession. So the question is, does the US fall into recession? And if so, how bad does that get? What does that do to risk assets in general? But I do think, the structural bull case for Bitcoin is as, frankly, as strong as it's ever been, crypto assets in general. So I think, all-time highs this year certainly wouldn't surprise me, getting back up to that 73,000 level. The other thing too is to keep in mind is how does the Fed respond to potential slowness in the economy? To what degree do they start to aggressively decrease rates? I don't think that's in the cards necessarily. But again, we're keeping a close eye on things like the unemployment rate, which is starting to show weakness. Consumer defaults is starting to tick up, and so these are the things that could potentially move the U.S. closer into recession territory. I think we're starting to see risk assets respond appropriately. And so, all-time highs this year, I think there's, a couple of headwinds that Bitcoin, has to get through. But again, over the intermediate term, next 6, 12, 18 months, I think it looks very likely.
So what catalysts should investors be paying attention to? Of course, while Bitcoin ETFs were approved back in January, everyone was focused on that. Then the Bitcoin halving took place in April. Now that those two big events are over, what should investors be paying attention to next? And does the upcoming election, the presidential election, play a factor in markets at all, especially because crypto is, in fact, becoming more of a political issue?
Absolutely. So first of all, what should investors be looking for? I think the next immediate one around the corner is, of course, the potential approval of this spot Ethereum ETF. That could happen as early as next week. I think that'll obviously be positive for markets. We're starting to see increased adoption among not only the investor community, but the advisor community on the back of, spot Bitcoin ETF. So I think that helps just kind of further the, quote unquote, mainstreaming of Bitcoin as it relates to, institutional portfolios. Now, the election cycle is very interesting, and I'm glad you mentioned that because, like all things, Bitcoin, of course, has also become political. And I think what's interesting with this election cycle is the emergence of, the Bitcoin PACs, the crypto PACs. And they have a lot of money, and they've been very active, and they've had some early wins in terms of kind of backing crypto-positive candidates. And I think that's something that politicians are having to reckon with now. There was recently in the southern district or in the Bronx district, a candidate there who was kind of notoriously anti-crypto. And, one of the big PACs spent a fairly large sum of money just running generic campaign ads. So crypto is a force to be reckoned with in the campaign cycle. And I think you're starting to hear the candidates kind of talk more about that. If you look at, Trump, he's kind of jumped in, I think strategically on his part to try and position himself as kind of pro-crypto. The Biden White House has been a little bit more, slow in that respect. And so it'll be interesting, to see to what degree that emerges as a talking point, in the debates, as we get closer to the election cycle. But I do think, we're going to see more activity with crypto PACs starting to, aggressively, push candidates. And I think it's a good thing, frankly. I think, candidates need to understand that Bitcoin or crypto in general is a source of innovation. And if the rules and regulations aren't clear, are enforced in a haphazard fashion, that's just simply going to chase the crypto industry offshore. And frankly speaking, America is not at a point where it can really afford that.
Yeah, and expanding on that, Fairshake, we just learned, raised $160 million as of the end of May. And as you noted, Trump recently announced that his campaign would be accepting Bitcoin donations. And then the Winklevoss twins donated $2 million to the Trump campaign. Of course, some of that had to be refunded. A campaign source told me because it exceeded the legal limit.
Yep.
But it certainly is becoming more of a campaign issue. And we're also seeing crypto right now play out in politics. Sticking with politics, we have seen some regulatory advancements. In fact, last month, 71 House Democrats joined 208 House Republicans in voting yes for the Fit for the 21st Century Act, a crypto market structure bill. So what was your reaction to that development? And do you think we'll see more regulatory advancements in the upcoming year?
Yeah, I think that was, very favorable. I think, again, if you go back to kind of, a couple of years ago when politicians in Congress first started talking about crypto, it was kind of blanket statements. It's a bastion of, illicit trading, and it was, very unconstructive, kind of, overly simplistic, broad generalization. So I think in large part, the crypto lobby has forced politicians on both sides of the aisle to take a more thoughtful approach to understand it is a source of innovation. I think there's been some very constructive thoughts or talks around things like central bank digital currencies, which, as you mentioned, the FIT Act, addresses kind of privacy issues there. And so I think, especially in anything that can happen in a bipartisan nature to kind of foster innovation as it relates to crypto is categorically going to be a good thing, not just for the ecosystem, but also for Americans. If you look at how many Americans own crypto, it's on the order of 70 million at this point. So again, that's something that, Congress can't ignore, irrespective of, which side of the political aisle they're on. So I think thoughtful regulation is good, regulation where the default is coming from a place of we need to foster innovation, we need to foster kind of thoughtful, clear regulatory guidelines for crypto participants, investors. I think all of that is good for the industry.
Going back to crypto ETFs, last time you were on Crypto World was just before those spot Bitcoin ETFs were approved here in the US. At the time, you forecasted that it could lead to the mainstreaming of Bitcoin and that it could normalize in different portfolios, having Bitcoin could be more normalized. So now that it has been more than 5 months since spot Bitcoin ETFs started trading here in the US, what has changed, and do you think that Bitcoin has in fact become more mainstream?
It's certainly starting to. If you just look at the rapid AUM raise of the collective spot Bitcoin ETFs, that right there tells you that there was pent up demand. And a lot of that was self-directed, of course, investors, themselves individually electing to make allocations. But we've been hearing more and more. We talk to advisors and institutions every day, and there's a lot of conversations that we're having where advisors are saying, you know what, we weren't really thinking about this as a spot in our portfolio, but now all of a sudden we recognize that it's here to stay. It deserves a place. We're trying to figure out how to position it. What bucket does it sit in within the proverbial 60-40? And so that's only going to increase over time. I think especially too when we get into kind of a part of the growth cycle where the forward-looking expectations for both equities and fixed income are a little bit stressed relative to where they have been historically. Advisors, investors are starting to look at alternative assets, be it things like commodities, real estate, what have you. And of course, Bitcoin now is occupying, I think, a larger part of that conversation. And so I think that'll continue. And I think further ETF approvals like the pending Ethereum are just going to continue to push that down the road.
And expanding on that, last month the SEC approved a rule change which would pave the way for spot Ether ETFs. And speaking with CNBC, SEC Chair Gary Gensler indicated that a full approval could happen sometime over the summer. What do you think will change for Ethereum following a potential approval? And what do you think it means for the industry as a whole?
I think it's good because it's just, again, continued part of that mainstreaming. Ethereum has always been been kind of seen as potentially the more interesting crypto relative to Bitcoin. Simply because of smart contracts and all the things that can be built on top of it. Look at the whole Web3 ecosystem. A lot of that is driven by kind of smart contracts, of which Ethereum really championed. And so I think you've got a lot of people, and we've had conversations like this with investors that aren't necessarily advocates of Bitcoin or aren't investors in Bitcoin, but they love Ethereum. And so it's not the Venn diagram, so to speak, of that audience, there's certainly an overlap, but there's large parts that don't overlap. And so I think it's very positive for the industry as part of, the continued normalization of all crypto. It opens up more options for those that might not necessarily want Bitcoin in their portfolios or their clients' portfolios, but they do like Ethereum. And I think it also paves the way to just, more ETFs of, more cryptocurrencies down the road.
Do you think spot Ether ETFs will prove to be as popular as spot Bitcoin ETFs?
Well, I don't think so, just because, the market cap of Ethereum is lower. Bitcoin is still the dominant player in the space, but if you look on a relative basis, relative to their market cap, I wouldn't be surprised. Ethereum is a little more niche, I think. Most investors, generally speaking, if you talk to my grandmother, she knows about Bitcoin, she doesn't know about Ethereum. So it's, I think it is not going to be certainly put up the numbers that Bitcoin has. But I do think, relative to, Ethereum's market cap, we could certainly, still see billions come into those spot Ethereum ETFs, on a relatively quick timescale.
Bitwise released a note this week forecasting that spot Ether ETFs will attract $15 billion in net flows in the first 18 months since launching. Do you think that's a realistic forecast? It
could happen. It wouldn't surprise me. I think that'll largely depend on the macro environment, for risk on assets. So to the extent that we, have kind of a rotation out of risk on assets in general en masse, that could certainly stall that. But again, if you look at Ethereum's total market cap, you look at what, the collective Bitcoin spot ETFs have raised, which is roughly, 50 billion. It's certainly in line with Ethereum's market cap relative to Bitcoin as well too. So it's not unlikely, but the caveat there is that, like I said, I think it's highly going to depend on the macro environment.
Now, we just learned that VanEck filed an application for a spot Salana ETF. It's the first of its kind application in the US. What do you think is going to happen there? Do you think that will even get approved?
I think it's only a matter of time. I think the approval of the Ethereum ETF is a very kind of good step in that direction. Solana makes the most sense. After Ethereum, it's I think by far the most popular crypto, if you kind of put aside Binance token for now. And Solana too has started to take a lot of share away from Ethereum for scalability and high gas fee concerns. So Solana has really kind of demonstrated a very powerful use case, real time in the ecosystem. Developers love to build on Solana. I think it makes a lot of sense. VanEck has always been kind of very innovative in terms of bringing thoughtful exposures to market early. So I'm not surprised that they were the first ones to file. I remember having a conversation with Jan VanEck back in 2012 about Bitcoin when it was on no one's radar. So they have been steeped in crypto for a long time, and so I think it makes a lot of sense. They've already got an ETP, Solana ETP in Europe, an ETN, I think. So I think it makes a lot of sense. In terms of how long does an approval take? Again, I think that depends in part on the political environment. Does it happen before the election? It's hard to say. But I do think once the ETF, spot ETF is approved, I think that dramatically increases the odds that the Solana ETF is approved in relatively short order.
Do you think other asset managers will follow suit and file applications for spot Solana ETFs as well?
Yeah, I would think so. The potential audience is too big. It makes too much sense. Like I said, Solana has a very kind of unique value proposition within the crypto ecosystem. So I would have to imagine others would follow suit.
Switching gears, Bitcoin miners advanced this week. That includes Hut 8. After announcing a $150 million investment to build AI infrastructure. Core Scientific is another one that advanced this week after announcing that it was expanding its recently announced partnership with CoreWeave. Of course, Bitcoin miners are becoming attractive targets for new investment in M&A, given their electricity contracts and their data center footprints. So what do you think is happening there? What do you make of those developments? And do you think we'll see more deals like this in the space? And What does it mean for Bitcoin miner stocks?
I think we will see more deals. I think it's certainly positive for the industry. It's positive for the miners. If you think about Bitcoin miners, their kind of sole job has been to acquire cheap electricity and computing power to mine Bitcoin, and they were early to that game. And so all of a sudden, when AI emerged as a very compelling use case with rapid adoption that we haven't seen since the internet of the late 90s, frankly. Now all of a sudden the supply and demand overlap between what to your exact point, what the Bitcoin miners have, which is power contracts and big footprints, and now the new demand coming from these AI and HPC, these kind of high processing computing centers, is a perfect match. Now that said, the caveat, of course, is that you can't simply flip a switch and turn a Bitcoin mining facility into something that can start sending compute to AI data centers. AI data centers typically have more expensive build outs, more complicated build outs, higher demands on things like dual power and internet and things like that. But that said, it's still a kind of a perfect overlap of supply and demand. So I do think we'll see more acquisitions in that space. It makes the most sense. It's kind of the classic buy versus build phenomenon. As these AI data centers or these investors looking to kind of purchase access to AI data centers are looking at their options, M&A makes perfect sense. So it's going to be, I think, good for the mining stocks, good for the industry, and ultimately, good for Bitcoin.
Generally speaking, what do you think of the convergence of AI and blockchain technology? Are you hearing more about this, more buzz around this? And what is your outlook for the two technologies?
Yes, there's a lot of buzz. There's a lot of hype, as with anything in the crypto space. So that said, there are some interesting projects. I think zooming out and just philosophically speaking, there's, I think a lot of interesting overlap between the decentralized, immutable nature of Bitcoin, kind of the permissionless, factor, and, AI beyond just, pure computing. You think about, kind of decentralized, permissionless AI apps running on, various blockchains, and, there's a lot of powerful potential use cases there. There's some, very interesting projects, some very interesting blockchains kind of early to that space. As with anything, as with Web3, there was also a lot of hype. The user case didn't, prove out in quite the way that many had hoped. But I am cautiously optimistic for the confluence of AI and blockchain technology to, really deliver a lot of value in the future.
Bitwise also released a note this month arguing that AI and crypto could add $20 trillion to the global economy by the end of the decade. VanEck was a little more conservative and forecasted that crypto and AI revenues would reach $10.2 billion by the end of 2030, and that's their base case. Do you think those are realistic forecasts?
Yeah, I think VanEck's base case is certainly, certainly achievable. From there, how far, what's the upside? It remains to be seen. One thing I will say is if you just look at AI in general, like I said, it has emerged with kind of a rapid adoption that we haven't seen since the internet. It's even surpassed the internet. When ChatGPT came out, for example, a lot of people kind of thought, oh, this is a curious little app, and now all of a sudden everybody's using it, even people that aren't necessarily tech savvy. And the use cases just keep expanding. I just read something today about how Amazon is going to have AI agents help you, shop, embedded in your, based on your preferences and things like that. And so, the AI use case and growth trajectory cannot be underestimated. And to the degree that blockchain can help facilitate that, in ways that are, kind of consistent with what blockchain does well, is decentralized, permissionless, scalable. I think that does make sense. So in terms of putting numbers on it, I think VanEck's base case is absolutely achievable. Does it get as high as what Bitwise was saying? Remains to be seen, but certainly isn't out of the realm of possibility.
Ben McMillan, IDX Digital Assets CIO and founder, thank you very much for joining us.
Thank you.